Good, so now we've got all the entries in. So we can just check to make sure that everything is done. Go back to the question. We will go through both sides, make sure that we either ticked it or we fixed it. So if I look at the 33,750, it was there, I ticked it, so it's fine. 8640, I fixed it in A, so it's done. 5,400, I fixed it in D, so it's also done. 77,190 was this last thing I did in F, so it is done. So everything on the debit side either was on their statement or we fixed it. On the credit side, 81,000, we ticked it. It was on both. 40,950, I fixed in B. 25,000, I ticked on both, so it is fine. 50,250, I fixed in C. It was that one. The 8,100, I fixed in E. It's the one that was on the incorrect side. So everything on the credit side, I either ticked or fixed. Let's just go to the statement, make sure everything in there is correct. The 81,000 I ticked, the 25,000 I ticked, the 20,250 I fixed in C. Credit side, 33,750 I ticked, the 8640 I fixed in A, or the 6840, the 8,100 I fixed in E. So everything on the credit side is also accounted for. So I've done everything. My recon should now balance. Let's go back and see. I must now just add everything in the credit on the creditor's ledger and get a total and do the same for the statement. So I'll take the 147,820 plus 1,800 minus 40950 minus 8,100 minus 8,100, and that gives me 92470. I'll do the same with the statement, 145060 plus 30,000 minus 5,400 minus 77,190, and that also gives me 92470, which means my recon balances. So I'm now done with the recon. Let's just see if there's anything else I need to do. Just see. Good, so number 2.2.2, the internal auditor insists that direct payments must be used to pay suppliers. Explain one reason to support this decision. All companies are basically moving towards EFT. It's first of all much safer. It's not a check that somebody can steal and fraudulently put into a wrong account. So it's much safer, it's much quicker. If I pay, it's immediately there. So there's a lot of reasons why it is much better than a check payment. The internal control procedures, in other words, what must we do to make sure that people don't start transferring funds into wrong accounts, etc. You'll basically do the same as with a check. A check, you need 2 signatures. So you'll have a little approval slip which 2 managers must sign before you can actually transfer the money. So anything like that, there must be senior supervision or approval of any fund transfers, etc. That will be fine. Refer to invoice 301. It was discovered that the store manager Vernon had signed a fictitious order form and took the goods for himself when they arrived. Besides dismissing Vernon, provide one suggestion for action to be taken against him. Now let's... Okay, because he stole the goods, besides from dismissing him, you can actually make a criminal case against him. You can charge him with theft so that he can be arrested, or you can get a court order to deduct the money from his pay, but definitely you would make a criminal case. What can you do to prevent this in future? The big thing here is segregation or division of duties. The person ordering the stuff should not be the same as the person receiving it. When you use the measure segregation of duties, you must elaborate a bit more. You cannot just stop there. You must say what you mean with it. And with that, it means the guy ordering the stuff should not be the same as the guy receiving it, because then by doing that you can ensure that that at least two people then have to be involved. Those are very common type of questions that you get with a creditor's recon. So if you know how to answer them, it should be fine. So do a couple of creditors recon and see how it goes. Good luck.